Hello everyone, Paul Benedict here with the Benedict Group at Keller Williams Realty Las Vegas. I'm here on Thursday, March 18th to give you a very cool market update in the ever-exciting saga of the Las Vegas real estate market. Don't mind that big head behind me. We just finished our recognition party here at Keller Williams Realty Las Vegas, and they made a big, huge head of myself, even though my normal head is already large enough. They tried to make it even bigger with that one. So let's talk about some numbers, what's been going on in the market. Strap in, it's a wild ride. This is the most important thing to focus on right now. Our city has 2,602 houses listed for sale. It's virtually nothing. 3 weeks of inventory, and that is being caused by several things. Well, first and foremost, COVID caused changes in everything in the economy. Lumber costs went up. Materials for new homes went up. Labor has changed. Sellers don't know where to go. So sellers that would be selling their homes are not listing their houses for sale because they don't know where they're going to go. There's uncertainty. They don't have anywhere to go. They've heard how crazy the buying market is, so they're just sitting tight. Couple that with people moving from California at very high rates. It's causing a complete shortage of inventory. So we are in almost a gridlock. Last month, 3,389 houses sold. So let me say this again. There are 2,602 houses available. Last month we sold 3,389. So that means there's a 0.8 month inventory here in Las Vegas. That's an extreme seller's market. If you are considering selling your home, now is the time to list. You will have multiple offers. You will have bidding wars on your house as long as it's priced well and it's in decent shape. Now, where will you move? Well, we can talk about a lease back. You might rent a house. You might buy a home in a different state. We can discuss all the options. The rental market here is very strong as well. Because of the shortage of inventory that has driven prices up, February gave us a median sales price of detached houses of $355,000. That's 12% higher than February of last year. So we've had a year-over-year appreciation of 12%. And from January to February, that's about 3%. So from 345 to 355, that's about a 3% increase month over month. And that's what we should be seeing year over year, not month over month. Attached product, that's condos, townhouses, patio homes. 198 is the median price there. That's up 13% from last February. If we look at high rises, all high rises in Vegas carried a median price of 320 as of February, and that's down 7%. The reason why that's down is because the activity tapered off quite a bit after COVID in the high rise market because a lot of investors and second home buyers exited the market. If you lump all the properties together in Las Vegas that are attached and detached, houses, townhouses, condos, that gives us a price of $330,000. And we use this number to compare our metro area with the national median home price, which the most recent data the National Association of Realtors has for us is $304,000. That's as of January, which is up 11% from the year prior. This number is slightly concerning. The median income in Las Vegas is going to have a hard time affording the median home price, and that's not good for affordability. This is something interesting to talk about. Percentage of sales going to cash buyers is up 26% in February. Now, I suspect that March is going to have an even higher number. And a big reason for this is sellers are taking cash offers over the financing offers. When there are 6 offers that you're deciding amongst, and there are a few cash offers that are above the asking price, sellers will most likely take the cash offer, usually. But it's not only about price, it's also about terms and closing dates and things like that. Looking at price per square foot, $185 a foot for resale properties, and that's up 11% from the year prior. Now, comparing that to new properties, the gap is narrowing. Prices in the resale market are rising so rapidly that they're approaching new construction territory very quickly. Residential high-rise condos carried a price of $329 a foot, and condo hotels carried a price per foot of $368. Now, closing volume, we talked about this briefly a moment ago. 3,389 properties sold through the MLS in February, and that's 13% more than February of the prior year. And out of those 3,389, 9 of them were bank-owned, 12 were short sale. The rest were non-distressed traditional equity sales. 884 of them, or 26%, were cash buyers. Now, I want to draw your attention to this really interesting statistic. Sale price to list price ratio. In my 17 years of real estate, I've never seen it at 100%. So that means that properties are selling for more than the asking price and right around the asking price. That's why the average is 100% for February. However, there are some price reductions. 99.5% is the sales price to original list price ratio. It's also interesting to note that almost 6,000 properties are under contract. So there are an additional 6,000 properties in play if you will. 2,600 are available for sale right now. 3,389 closed last month. And currently almost 6,000 are under contract. So there are more under contract than are available. A lot of people are asking me, are the prices going to crash? Is the market going to go down? Should I wait to buy a house? And I keep saying that there's no indication prices are going to crash. There's no indication we're in a bubble. And people keep saying, well, the prices are going up so much. You know, this must be a bubble that's going to burst. They can't just keep going up forever. Well, you're right. They're not going to keep going up forever. Things will taper off once there's more inventory listed. But there's no indication that the prices will crash. So here's a little bit of evidence for that. Let's look at a graph here provided by our escrow company, our title company, Lawyers Title. So this is a pie chart of all properties in Clark County. So all residential properties in southern Nevada. There are 674,000 of them. Houses, townhouses, condos. What is the equity position of those 674,000 properties? This is very interesting. What is this gigantic blue section here? Almost 344,000 properties are owned free and clear. No mortgages. So over half of all properties in southern Nevada don't even have a mortgage to foreclose. 31.6% of them have over 25% equity. So it's highly unlikely that these will foreclose ever. 102,000 of the properties, which is almost 16% of properties in southern Nevada, have less than 25% equity. So it'd be interesting to see, which I don't have, but it'd be interesting to see how many properties are upside down in Las Vegas. And I'm sure the percentage is extremely small. Now, if you're upside down in value, then there's a chance you might foreclose, because if you can't make your payment and you can't sell, you'll either do a short sale, which is tough, or you'll foreclose. But with this being evident here, how can there be a wave of foreclosures if there's so much equity in southern Nevada? Just something to ponder. More information so you can make best decisions possible for your family. If you're a home buyer, it's an excellent time to buy because the interest rates are so low. However, there's not a lot of inventory. If you're willing to play the game and allow a competent realtor to assist you in finding a house, whether it's a brand new construction house or a resale home, it is a great time to buy. And if you're a homeowner considering selling, let's talk about that, and let me run some comps for your neighborhood and tell you what I think your house might sell for in this insane market that we're in. It's very interesting times in Vegas. Let's try to decipher the market together and help you make the best decision for yourself and your family. As always, if you have specific questions, I'm standing by to help. My team and I are ready to assist you. Paul Benedict with Keller Williams Realty Las Vegas signing off. Thanks for watching.